Hello again, everyone. Thank you for participating in this BAASS virtual event. We really appreciate it. We're going to be talking about inter-entity transactions, and I think the real key to understanding what the solution can offer your organization is when you're dealing with intercompany loan accounts. The way that we manage this through inter-entity transactions is to allow you to identify one segment within your GL chart of accounts that is what we call a balancing segment. And by doing that, by identifying an entity segment within your GL chart of accounts, what it does is it allows you to balance these entries within one company database or across databases, and it identifies these balancing entries with an IY source type. And so what it means is that you can link your relationships between multiple companies, whether they're part of the same Sage 300 company database or across Sage 300 company databases, so that when I set up a transaction that creates a receivable in company 2's books that's due from company 1, that will automatically balance as a payable that's due to company 2 in company 1's books. So company 2's receivable from 1 will always match company 1's payable to 2. And you consistently route those relationships to identify when you want an entry to go directly from one company to another, which is what you see here, company 1 to 5, it's a one-step transaction. Or in a case where you want to route a transaction through a management or holding company, where the entries between entity 1 and 3 will actually clear through company 2. And that's the demonstration that I'm going to show you today, is the ability to move this entry from company 1 and 2 and then 1 and 3. And it knows how to move these entries to separate company databases because we link the entity segment to a separate Sage 300 company, and then log into that company and set up the GL transaction batch and either post it or leave it unposted. So to demonstrate that, I wanted to use an example of an AP invoice. This is generally one of the more common applications of inter-entity transactions because it does the GL transaction allocation through the loan accounts in the GL. This next session where I'm talking about inter-entity trade is going to talk about subledger transactions, buying and selling between AR, AP, and OE and PO. But for this presentation, inter-entity transactions, it's more concerned about the loan accounts of the expenses or revenue. So let's, in this case, use office supplies as our example. And you'll notice on the right-hand side, there's a panel here to attach a file. This is actually the document management link solution from Orchid Systems, which is not part of the inter-entity transactions. But notice that as I enter a vendor, it gives me a window based on that vendor and shows me the invoices that have previously been recorded in Sage 300 along with a copy of the document. And as I enter an invoice number, it will give me a new window to enter invoice 653. And then if I want to add that, I would simply go out and explore, and I have saved that invoice somewhere on my hard drive. And it's based on a structure under AP Documents Vendor 1200. So if I just go over here quickly and grab a document, and I say it's called Jaguar XF Prestige, but I want to drag that into the window, you can see it's just a PDF. If I drag it into the window here, it would rename that document and add it as an invoice into the system. So this is one way that we can support the different transactions that we're listing here. So if we grab this and drag it in, it gives me invoice 653 and now shows me the document attached to that entry. And that will be stored in a folder outside of Sage 300 against that invoice. But coming back to inter-entity transactions, if we enter the invoice as $2,000, we can utilize the distribution set within Sage 300. If you're not familiar with distribution sets, what this allows us to do is choose to allocate by creating a distribution where I can predefine a percentage allocation across multiple accounts, and I don't have to enter in those details manually. Now in this case, I'm also going to remove the allocation to company 4 and company 5 and the line for inventory. I just want to allocate across 3 companies. And the thing to note is that segment value that we talked about. The -1, -2, -3 allows me to choose how I want to allocate this entry. So I'm going to put $1,000 in company 1, which is the company I'm in, but allocate 600 of the expense to company 2 and 400 of the expense to company 3. And then because I don't want to have tax involved, now of course in Canada with input tax credits, you might want to keep the tax in the company that's paying the invoice so they get reimbursed. And that's something that you decide as a policy or a procedure. But I'm going to eliminate the tax just so we can focus on the core transaction itself. And then we'll post this entry up to the general ledger, and we'll explain what's about to happen with interentity. So I've eliminated the tax, and I now have my entry where I've allocated across 3 companies. So I'll save that, and I'll post the entry up to my general ledger, and do that through the AP invoice batch. So there's my transaction for today. I post, and it goes up to my general ledger. So now in my GL in this company, I have a transaction batch with today's date on it. Okay, batch 413, December the 1st. And if I open up that batch, I have the invoice details offset by the accounts payable credit. So I have a credit of 2,000 and a total debit of 2,000. But the difference is that I'm allocating this expense across 3 companies. So what happens here is that if I enter the transaction and I don't have interentity installed, it's going to post this entry, but then I'm going to have to manually reconcile the fact that I've allocated $600 to company 2 and $400 to company 3. And that's where the manual work comes in that I talked about, how you can save that, because when you use interentity, it's going to identify the fact that I've got a $600 debit to company 2 with no offsetting credit of $600, and likewise a $400 debit with no offsetting credit of $400. And what we want interentity to do is to add some additional lines to this batch when I post it, which will use that IY source type to create the credit entries of 600 in company 2's book, which is payable to company 1, and likewise in company 3's book, a payable of 400 due to company 1. And then how do we deal with the imbalance within company 1? I've got a credit of 2,000 and a debit of 1,000. So what interentity does there is it says I need to create a $600 receivable and a $400 receivable, also with the IY source type. But in this case, they're being debited in company 1's books as a receivable from company 2 and a receivable from company 3. And so now I've got a $1,000 expense plus $1,000 of intercompany receivables to match my payable of $2,000. And all of this is done behind the scenes automatically as I post the entry within Sage 300. So we'll erase those drawings and we'll go ahead and we'll post this entry. And because company 2 and company 3 are separate company databases, once I balance the entries, you'll see that those lines move over to those databases automatically. So we'll go ahead and post, and we'll see interentity is doing its thing by, first of all, balancing the entries and then exporting the entries over to company 2 and company 3. And then it adds those lines here within the batch. So now when I come back and I see this entry, my original $2,000 debit to AP trade control in company 1, and my expense of $1,000 in company 1 now has that intercompany receivable that's due from company 2 in company 1's books of $600, and another intercompany receivable in company 1 that's due from company 2 because I cleared the entry through company 3. Okay, so there's my balanced entry of $2,000 worth of debits and $2,000 worth of credits. Now, likewise, the $600 debit has a credit for company 2, 7900-2. So there's my balanced entry for company 2. My balanced entry for company 3 shows the expense of office supplies and the DueTo. So because it's clearing through company 2, it's showing as a payable to company 2. But those are all the lines that are created through interentity, which are all of my DueTo DueFrom accounts. And because it balances those entries by company and matches the payable with the receivable, you don't have to do any of that manually matching yourselves. And then what you see down here are the reversing entries. As I've recorded the office supplies expense in company 2 and company 3, I credit out those expense amounts. So those accounts net to 0 within company 1's books. Okay, so now let's take a look and see what's happened within company 2 and company 3. So this was company 1, remember. So if we go over to company 2, you'll see that the office supplies expense would have been set up as a GL transaction. And it will also show you the clearing entries. So here's my batch created today, December the 1st. And there's the transaction details for the office supplies expense, $600 debit. And we've brought across the vendor name and number, as well as the original invoice that was set up for that vendor in company 1. And then the credit to balance the entry within company 2 is my payable to company 1 because they made the payment or the invoice expense on my behalf. Now the last two lines here are the clearing entries because we moved the transaction from company 1 to company 2, and then once it cleared company 2, pushed it down to company 3. So that's why you see a payable that's due to company 1 offset by a receivable that's due from company 3. We've cleared the entry through company 2 that was made on behalf of company 3 in company 1's books. So now if we move to company 3 and we take a look at what's been set up there, we have a journal entry set up in the GL. Again, today's date, December the 1st. We open up that transaction and there's the office supplies expense debit in company 3's books, offset by the intercompany payable that's due to company 2 because we cleared it through the management or parent company. And again, the details bring across a comment as well as the vendor name and number and the invoice details. And if we had set up document management link, you could also show the original invoice popping up on this screen as well. So that's an example of how you would do an expense allocation that automatically allocates the expense and sets up the loan account entries so that you don't have to manually reconcile those transactions at month end. Now, in addition to manually or to automatically setting up those transactions, we do have an audit inquiry that will show you all of the transactions that have been set up between all the companies. So as we talked about during the keynote session, we want to make sure that everything's been properly exported, and if there's an error, there's a reason why there's an error in the system. And in this case, there was a currency mismatch between a multi-currency company and a single currency company. But there's the entries that we did today, batch 413, and as you saw, they were properly exported. So the audit trail is going to give you a record of all the entries that have gone between the various Sage 300 companies. In addition to that, we give you an inquiry that will show you all the loan account balances among the companies. And if you see an entry that is out of balance, it will be highlighted for you. But the nice thing about interentity is that once you get your loan accounts in balance, we will force them to stay in balance because we have to balance all the debits and credits for every entry that you enter in the system. So this gives you both an inquiry and a report to validate that your loan accounts are indeed in balance. And because we've got the intercompany relationships set up, we can also provide you with a consolidated aged trial balance for both accounts receivable and accounts payable that will show you a balance payable to a vendor by company as a subtotal, and then a grand total across all companies. And that's a nice benefit of utilizing interentity transactions, is that we can provide the same trial balance that you use today in your standard AR AP modules, but now because of the relationship that interentity supports across companies, we can show you a consolidated trial balance per customer, per vendor across multiple companies. So that is a common transaction, the interentity expense allocation. Now, one of the other things that we do is we also manage your cash transactions. So you can make payments on behalf of related companies. You can also receive money on behalf of related companies. You can also do bank transfers. And this is the entry that I'll show you next. Because we're using loan account entries and not actual invoices to represent the intercompany payables and receivables, you generally settle those by offsetting loan account entries or by transferring cash to pay down an intercompany receivable. Now, if we did want to create actual receivables and payables, we could use what we call our triggers function and do an AR or AP reallocation. So for those organizations that actually want to have an intercompany receivable payable assigned to the subledger, it is possible to move the loan account entries down into the subledger, create an AR or AP invoice, depending on the nature of the transaction, and then using trade to create the offsetting AR or AP invoice. Now, in this case, the receivables and payables are part of the subledger, and some companies like to do it that way rather than leaving them as a GL loan account entry, because now when you do your aged cash requirements in AP, you actually see intercompany or related party transactions as well as third-party transactions, and you get a global view of your cash requirements. But in a lot of cases, people are happy to just use the loan accounts. Now, in the case where we want to transfer money between intercompany or related companies, it's simply a matter of doing the bank transfer entry. And because we're doing it through bank services, so if we want to transfer cash, let's say from ORC Limited, which is company 1, to ORC IN2, because it's being done through bank services, it will automatically hit your bank rec and create the deposit and the withdrawal within bank services. So I'm going to move the money from ORC Limited or Entity 1's bank and transfer it to Company 2's bank. And you can see this is multi-currency. So let's say it was a $500 transfer. It will convert it to the Canadian home currency because Entity 1 is a Canadian home currency, Entity 2 is a US home currency. So it does support multi-currency, and it'll just move the entries over in the source currency amount and convert to the home currency equivalent as required. And so by simply posting this transfer, we've configured interentity to do the transaction in both Entity 1 and Entity 2, and we've auto-posted the entries to go up to the general ledger. So here in this company, because we withdrew the money, when I look at the bank entry in this company, it's going to be a withdrawal transaction to signify that we've moved the money. So there it is, December 1, and it's a withdrawal. So we're crediting our bank and debiting the loan account. So this is now a receivable that's due from Company 2 in Company 1's books of 500 US, which converts to 763.50 cents Canadian. And you can see the comment, I've added the reference. You can also choose your audit trail and determine what kinds of information you want to transfer between the companies so that you have a consistent audit trail between these companies. So in company one, I've done the withdrawal and it posted that up to the general ledger. In company two, we should see a deposit. So when we look at bank services in company two, and we look at the bank transactions bank entry, this is the US company. So we're going to see this denominated as a $500 US amount on December the 1st as a deposit, which is what we would expect. So in this case, we're debiting the bank for the deposit and crediting the loan account, which is a payable due to one in company two's books. But again, the reference information was brought across as a link to the original transaction for audit trail purposes. Now, we also posted this entry automatically up to the GL. So if we were to look at the general ledger transaction, we will now see a bank entry here, again for today's date. And if we open up the batch, we'll see that there was a debit made to the bank account in this company and the credit to the loan account. And the drill down is supported, so we can drill from the GL entry back into the bank entry to show the deposit. So again, the benefit here is that it's going through bank services. There's no adjustment required for the bank rec. The entries will hit bank services in both the source company, company one, and company two, and we don't have to worry about doing anything else. The loan accounts are balanced, the bank services module is updated, and we've recorded the cash movement correctly in both companies. Because that's another hidden benefit, I would say, of the inter-entity transactions module, is that you're able to avoid manual error through people entering or keying in the wrong information or the wrong amounts. If you get the initial entry correct in one company, it will automatically be correct in the other company. So again, with the inquiries tool, we saw the account balance and other transactions that are supported, like the cash management entries. There's also an audit inquiry for that. So you will see the transfer that we just posted as part of the audit trail. And you can again see it was a transfer out because we withdrew the money and transferred it in, and it records the date and the timestamp as well as the user who did the transaction. And we record both someone who created the entry as well as any amendments to those entries. So there's a full audit trail and a log of all of these entries that are recorded within the system. And the nice thing about inter-entity is that once you've configured it, you really don't have to do any work. All of the work is done in the standard Sage 300 modules so that you don't have to worry about configuring anything different than you're doing today in terms of entering your transactions. And because we're balancing everything at the GL level, inter-entity transactions will balance entries from AP for expense allocations, from AR for revenue allocations. It will also allow you to allocate payroll expenses from the payroll module or any other type of transaction that you can think of. Because we're balancing at the GL level, any transaction type is going to be supported within the system. So I'll leave it at that and open the floor for questions if there are any questions at this point in time.
I do have some questions here already, and just a reminder to use your question box in your panel if you do have any, just to type in. The first question I have is it possible to configure inter-entity to run in one company and across companies at the same time?
Excellent question. Yes, that is a great question because you can. Because we're using the segment code within the general ledger, when we link the accounts, we can balance these entries within the same Sage 300 company database and across Sage 300 company databases at the same time. So it would work at a departmental level as well as a company or organization level at the same time. Great question. Thank you for that.
What Sage 300 transaction modules does inter-entity transactions support?
Okay, yeah, and I just mentioned that actually because we're balancing the loan account entries at the GL level, we can support transactions from any Sage 300 module as well as any 300 core ISV modules that's written in the SDK. So that's the benefit again of using this module, is it supports any transaction type that ultimately finds its way posted to the GL. And that would actually even include something that you imported into the GL, because it's when we post the transaction batch in the GL that inter-entity does its balancing. So thank you for that question.
And the last question I have here is, what happens if two companies have a different home currency?
Okay, very good. I did mention that briefly as well for the bank services. Because we're supporting standard entries within Sage 300, when I did that bank entry in US dollars, it was in a Canadian company and it converted to the Canadian equivalent. If we had done it the other way and set it up as a US dollar entry, it would have come to this company as a US dollar source amount and been converted to the home currency equivalent. So you would see that here if we opened up the GL batch within company one, which is the Canadian home currency. This transaction will show as both a US source and a Canadian equivalent. So there's the Canadian currency being recorded as 763 credit, but the source debit, which is the US 500, but it will ultimately balance as a Canadian debit and credit of 763.50. Very good question. Thank you for those.
That does look like that's all the questions we have for this session. So thank you, Robert.